I'm going to be going over the price action today for GBPUSD and why my bias was short. So, let's look in the weekly time frame. All right. We see we have a weekly range. So let's mark this out. Weekly range. Mark out each individual week. All right. And then let's move on down to the 4-hour time frame. Hold up. Let me add one more. All right. 4-hour time frame. Make things clear so you can see exactly what I was looking at. So let's mark out our range. Mark out the 50%. And as you can see, we get week 1, thick up close candle, consolidation at the top. This is the 4-hour order flow. We get a turtle soup above. Right? So now, this is how we're going to probe our order flow. Rejection of highs, breaking lows, rejecting highs, breaking lows, rejecting highs, breaking lows. So you can clearly see order flow is bearish, and now we're bearish up until we reach this draw on liquidity. All right. Then last week, same situation. We're rejecting highs, breaking lows, rejecting highs, breaking lows, right? So then we go over to today. So we're going to mark out our daily candle, right? So the day closes at 5 p.m. And then we're going to mark out our individual 4-hour candles, 1, 5, and 9. 1, 5, 9, and 1, right? So let's go down to the 30-minute time frame. And so this right here is Monday, the new week. Play this forward, right? So let's mark out midnight. Get our midnight opening price. We have our 1 a.m. candle range. Now, why am I selecting this range? Well, first of all, let's go all the way to 9 a.m. because this is the candle that I trade, right? So before 9 a.m. opens up, I'm looking at the chart. What am I seeing? So we know from the 4-hour that we're bearish. We're rejecting highs. We're breaking lows all the way down until we reach here. So when I'm looking at the 4-hour time frame going into the 9 a.m. candle, what am I seeing? Well, I see the 1 a.m. candle and the high got rejected, right? We also see a 4-hour order block, which is the key level. All right, so this candle, it's an up close candle in a downtrend, which acts as like resistance against prices. Same thing if we're in an uptrend, if we are in a uptrend, the down close candles will act as support to go up, whereas the up close candles in a downtrend will push prices further down. So this right here is a 3 candle model, right? So we have the key level marked, we have the range, and we have the candle 2 manipulation, right? So if you go down to the 15-minute time frame and we're looking at the intraday price action, this is what we see. All right. So we have our 4-hour candle range. We have our 50% marked right here. So how do we trade a candle 3 when we're expecting this type of situation where you have a candle 1, you have a candle 2 manipulation into a key level that closes inside of a range? How are you supposed to trade a 3 candle model? Well, this is how you do it. First of all, you want to identify your stop loss. If candle 2 is the real manipulation, there's no way that price should have to retrace back above this candle, right? We also have a 15-minute order block right here, right? Last up close candle, thick up close candle that closes above the range. Next candle closes below. Well, I guess it closes below right here. So if you're trading candle 2, you'd enter on this order block, which would be right here. Your entry would be at 8:15, but I don't trade this. We trade candle 3. So now what am I looking for? To trade candle 3, I want to pick a key level off of candle 2. So a key level within here to put a limit order, stop loss above the high. So what did I choose? Well, I went down to the 5-minute time frame to find something that looked more structured. And this is what I saw. I saw this 5-minute. This was the candle that traded into the order block, instantly closed below it. So this was a 5-minute order block. This is what I wanted to enter on, right? This was my key level from candle 2, right? So the setup would have looked like this. You place your limit order here, stop loss at the high of candle 2, target 50%, and then the low, right? So just to backtrack, right? 4-hour time frame. Weekly candle, bearish, turtle soup, rejecting highs, breaking lows, rejecting highs, breaking lows, all the way down. So we have a rejection of high. So what are we expecting this to break the low? So before 9 a.m. even opened up, limit order placed on this 5-minute order block, stop loss at the highs. What happens? 9 a.m. opens up. Now, note something really important here, right? Here's the 9 a.m. open. And what do you see here? This is where pattern traders will get fucked up, right? So if you were pattern trading this to the upside, what do you see here? Well, we see a 5-minute model 1, right? 5-minute order block. I don't want to get too confusing, so we're just going to leave it at that, right? We're expecting lower prices. Play the 5-minute. And you can see, well, for one, I did not get this trade because my entry never got hit. So mistake from execution today for me was well, I guess there really wasn't a mistake. I could have used the 15-minute order block right here, right? Up close candles in a downtrend, reject prices, right? But I selected the 5-minute order block right here as my entry because the risk reward was favorable, If I would have used this candle, right? Stop loss at the high. The risk to reward to the 50% was only a 1-to-1. I'm not willing to take that. And it wasn't even a 1-to-3 to the low. So I didn't take that entry. I wanted all the way up here. That was what I was looking for. Regardless, it didn't happen. But what do we see? Rejecting highs, breaking lows. Look at the 4-hour time frame, right? The 9 a.m. candle was a thick expansion candle. Candle 1, candle 2 manipulation rejects the high. We expect the next candle to break the low. Also forming an open, high, low, close. Other observations we can make. Notice how during the manipulation up here, how choppy it is. This is because the market makers want as little participants as possible to actually catch the move, right? And another thing is if you are trading the 5-minute time frame, you have this 5-minute order block right here. Could have entered on this, but you know, that's not my model. My model is key level off candle 2. Regardless, these are all entry techniques. You know, find an entry technique that works for you. Something else I want to note. Look at where the low of the candle is. Let's say you enter this and 50% gets hit at 10:35. Well, that's not even halfway through the full 9 a.m. candle. So if you are expecting a smash day, this is something that I mentioned to one of my close friends. Larry Williams talks about it. If you were expecting an expansion candle, then the best way to profit off of it is to hold the candle until close. Now, why is that, and how do we expect expansion candles like this? Well, it's just like I showed you, you know? If we're rejecting highs all the way through here, we're expecting the next candles to break lows, especially when the timing is right. And now where does the low of the candle happen? After 12 o'clock, 12:15. Makes the low, rejects off of it, creates the close of the candle at 1 p.m. So that was the GBPUSD price action review for the day. No trade today because I didn't get tagged into my entry I wanted right here. Would have been a 1 to 5 risk reward. Risk 100 to make 500, or risk whatever you want to make whatever you want, you know. That's how trading goes. So yeah, that's all I got. Draw on liquidity, the weekly low. If you want to know what the lower time frames are going to do, make sure you understand the higher time frame directional bias by using CRT. Probe order flow with rejections and closes below. Rejecting highs, breaking lows. And you wait for high probability days where the setups align, key levels, manipulations, 3-candle model. Simple shit. That's how you read the markets. Till next time.